morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look, or a closer look rather, at the manufacturing sector of the Trinidad and Tobago Stock Exchange, given that it's one of the bellwether sectors as a gauge of economic health and activity widely viewed across the globe. So, how has the sector been performing? How have the individual constituents of this sector been performing, and what can investors expect in the months ahead? Well, let's take a look. Now, over the course of, since the end of 2019 or the start of 2020 to current times, the value of manufacturing sector stocks has tumbled just around 14.8% from that 16.2 odd billion at the start of 2020, as mentioned, to its closing price or to closing price levels as at the end of last Friday, around $13.78 billion TT. That is again a 14.8% decline, which would have pretty much reflected a decrease in investor confidence, as well as the reality setting in of some deterioration in performance, which may not have been reflected in stock prices over the past couple of months. Now, notwithstanding, there has been some turnaround in earnings over the past fiscal year. However, share prices may not have bounced back as quickly, perhaps because they were reflecting slightly elevated levels to start with at the beginning of fiscal 2020 or the end of 2019. And when we take a look at some of the sector constituents, we notice that TCL, for example, would have posted a wider loss, moving from a loss of 3 cents per share in 2019 to a loss of 7 cents per share in 2020. So they actually deteriorated in terms of earnings. However, they were one of the better performing stocks in currently over that comparable period, moving from a price of $2 to $3, and really that has been in response to changes in the competitive environment. More on that later. NFM, meanwhile, would have surprisingly done very well during the pandemic-stricken year of 2020, generating an earnings of 5 cents per share in 2019 compared to its most recently announced earnings of 20 cents per share, a 300% increase. Its stock price would have actually reflected a fairly significant improvement from $1.35 to $2.25 per share, which is roughly a 67% improvement. Otherwise, there were some fairly significant changes in terms of earnings. Unilever Caribbean, One Caribbean Media, and Guardian Media Limited all swung from losses to profits in the most recently concluded fiscal year of 2020. However, their share prices over the comparable period would have declined fairly significantly. Again, this is from the start of 2020 to current levels. Unilever Caribbean declining by just around 30%, One Caribbean Media by 42% from $8.50 to $4.89, and Guardian Media Limited declining by 60% from $7.50 to $3, just around the $3 mark. Angostura and Whitco, the largest components of the manufacturing sector, accounting for a combined 84 to 85% of the total sector value, would have declined just around 5 and 21% respectively, despite fairly unmoved earnings over the course of fiscal 2019 to fiscal 2020. Now, that's the case of what has happened. What could happen at the industry level for each of these stocks based on the very, very varied different types of industries that the sector represents. Again, TCL is in construction materials, NFM food processing, personal care products is Unilever, One Caribbean Media and Guardian Media Limited in broadcasting, Angostura Holdings Limited in distilleries, and Whitco in tobacco. Well, let's take a quick look at that. Now, in the case of Trinidad Cement Limited and the construction materials sector, TCL is set to benefit, and this has been reflected to some degree in its stock price, from the potential for reduced or more or fairer playing field, rather, in terms of fairer competition with the introduction or the very likely introduction of tariffs on its major competitor, which would have led to much lower cement prices over the course of the past 2-3 years. That is now appears to be being corrected. TCL also has, over the past couple of years, been engaging in cost containment and restructuring initiatives, and that would be leading to improved operating efficiency. One of the major macro themes, however, for TCL across the region, but particularly in Trinidad and Tobago, is the potential for reduced government spending, especially in an environment where government revenues start to become constrained. And there is the conversation happening about how much can the government of Trinidad and Tobago continue to borrow, notwithstanding its relatively low debt to GDP levels. Angostura Holdings Limited Product innovation remains key for the group in terms of an industry driver. It's keeping the brand fresh through continued product introductions, the most recent being its white oak, pink grapefruit, new rum, flavored rum. Improved operating efficiencies are expected at Angostura Holdings Limited as they complete or conclude some of their developmental works. However, there is the major challenge of seasonal demand hurdles, rather, given that many of these major seasonal demand factors or seasonal demand drivers have been put to the sword in recent times, most notably the cancellation of Carnival in 2021. When we take a look at NFM, well, in terms of food processing, it is a consumer staple and should have fairly resilient demand, whatever the conditions. NFM continues to improve its operating efficiency with improving margins at the profit level in terms of profits. There is, however, the consideration for supply chain challenges, not just for NFM, but at the global level, as the pandemic has certainly wrought havoc with supply chains for not just food, but even durable goods, etc., across the globe. In the case of UCL or Unilever Caribbean, well, the pandemic has actually led to a resurgence in demand for personal care products and hygiene products in particular, and that would have helped UCL in its most recently concluded financial year. Notwithstanding, there has also been an improvement in operating efficiency for Unilever Caribbean, and that is expected given the restructuring that the company or the group would have taken over the past couple of years in terms of making its operations a little bit much more efficient. And finally, in terms of WITCO, we see that consumer loyalty will continue to play a role in resilience for its products and sales. There is, however, the effect of increasing regulations through increased tariffs most recently, affecting prices or pushing prices upward, and that will lead to some pass-through effect to consumers, as well as the impact of stiffer competition through tobacco substitutes as well as illicit products. So WITCO certainly has some challenges on its hands, but it seems to be navigating so far fairly well. And in the case of the broadcasting industry, in the case of One Caribbean Media and GML, some of the industry trends that investors should look out for is the continued service or product expansion. In the case of Guardian Media Limited, they are taking an active approach to increase their local or unique content production, which should generate some level of loyalty or increased interest in the brand and for advertising space in the case of that particular company. Non-traditional competition seems to be a recurring trend in the broadcasting area, however, with digital media and digital marketing efforts substituting to a large extent traditional media channels of newspaper and other traditional avenues. So that's what investors should be expecting over the next couple of months. It's still very much up in the air as to which direction the manufacturing sector of publicly listed stocks will go. But of course, you should be able to consult an experienced investment advisor such as Bourse when you're making a better or more informed decisions for your investment portfolio. But that's it for this week's edition. For more information, give us a call at 226-8773. Email us at invest@boursefinancial.com or check out our website, bourseinvestment.com, where this and all of our research is absolutely free. And of course, you can catch us in today's business section of the Trinidad and Tobago Guardian newspaper. Have yourselves a wonderful investing week. This has been the Bourse Report.